Current affairs. In the special series 2025, the Year of Reforms, now we bring you a discussion on citizen-centric tax reforms. The participants are Sharad Kohli and Dilip Chinoy, economic analysts. Moderator is Nishit Kumar.
Good evening, listeners. As we near the end of the year and look forward to the new year, let's take a journey back in time, where the tax reforms of the 2025 represent a move towards Viksit Bharat, where tax system is viewed not as a burden, but as a transparent service to the citizen. In the year gone by, India has undergone a transformative shift in its fiscal policy, moving towards a trust-based and citizen-centric tax environment. These reforms, often referred under the umbrella of GST 2.0 and the Income Tax Act 2025, focus on reducing the compliance burden for the common man while leveraging technology to make the system non-intrusive. And to discuss more about the same, we are privileged to be joined in by Mr. Sharad Kohli and Mr. Dilip Chinoy today, both noted economic analysts. Welcome to the show.
Thank you very much.
Thanks.
While the 2025 reforms have been hailed as citizen-centric, they have as well sparked a nuanced debate amongst all the stakeholders. Mr. Kohli, let's begin with you. How do you see the GST 2.0 regime and the broader contours of the rationalization?
Well, my greetings at the outset to all the listeners of Akashvani. I think GST 2.0 has been revolutionary, and ever since GST came on 1st of July 2017, I remember it came under a lot of discussion because it was the biggest change after independence made in the tax laws, especially on the indirect tax front. And a tax system, when it is introduced, is always evolutionary. It changes with the requirement. They say that necessity is the mother of invention. I think that applies to the tax laws because as the citizens start consuming it, as the government starts providing the services, as the technology is implemented in the whole system. So I think it was high time, and the government, probably the GST Council, shall I say, took a decision to bring in GST 2.0. And ever since the Prime Minister announced on the Independence Day from the ramparts of Red Fort, there was a lot of expectation in people when he announced that you're going to have a double Diwali this time. And it actually turned out to be double Diwali, not on Diwali, but much before Diwali itself. With the two rates being knocked off, I think people were in for a lot of benefit in terms of their domestic budgets. And we saw that happening. When the festive season came on 22nd of September, I remember when the GST 2.0 took effect, we saw a rush of booking cars, we saw a rush in booking white goods, consumable goods, your daily use items. And suddenly there was a spurt in demand. And we saw our GDP climbing up to 8.2% for the last quarter, although just a part of that quarter was probably involved in this. But the spurt was so much, the pent-up was so much that I think people welcomed the reforms with both arms. And India primarily is a consumption-driven economy. Almost 55 to 60% of our economy comprises of consumption. So any step undertaken to boost consumption has a multiplier effect on the GDP. And it showed up. And I'm expecting this momentum to continue. And not just for consumers. GST reforms made things easier for the registered dealers also. We have over 1.3 crore registered dealers in this country at this point of time. It benefits them also, in terms of compliance, in terms of filing of the forms, in terms of everything that they do is going to become easy. And I must also put on record that GST 2.0 is not end of the road. As I said, taxation system is an evolutionary process. We're going to have more reforms, and as has been promised while announcement that there's more to come. But I think for now, there's a lot of reason for citizens of the country to rejoice and enjoy the benefits of GST 2.0. And it was rightly called as GST Bachat Utsav because it brought savings to the common man, it brought savings to the household, it made India spend the way they wanted, it made India spend the quantum they wanted. It has absolutely been a boon for the people of the country, Nishan.
Absolutely, Mr. Kohli. But before we go any further, let's listen to the Prime Minister who introduced the new GST reforms.
देश की वर्तमान जरूरतों और भविष्य के सपनों को देखते हुए जीएसटी के ये नए रिफॉर्म्स लागू हो रहे हैं। नए स्वरूप में मुख्य रूप से अब सिर्फ 5% और 18% के ही टैक्स स्लैब रहेंगे। रोजमर्रा के इस्तेमाल की ज्यादातर चीजें, खाने पीने का सामान, दवाइयां, स्वास्थ्य और जीवन बीमा, ऐसे अनेकों सामान, अनेकों सेवाएं या टैक्स फ्री होगी या फिर केवल 5% टैक्स देना होगा।
Mr. Chinoy, as Mr. Kohli just discussed, India recorded a record sale of 6.05 trillion rupees for Diwali. That was the figure, which was an increase of almost 25% over the previous year, and the strongest Navratri sales in more than a decade now. Now, while there were apprehensions rather that the rationalization might dip the tax collection somewhat, but we saw figures quite to the contrary. Now, what was the game changer here?
Sharad has actually very nicely outlined the whole reform in the GST whole process. But the game changer for the citizen was actually a combination of two things. Last year, the income tax reforms were announced, but they took effect in April of this year. So there was greater saving for all the taxpayers because up to 12 lakhs was exempt. The second thing was that the response by consumers for GST 2.0 was, as you mentioned, festival sales hit a record high of 10 years. But the majority of the items which a common man would want saw the greatest reduction and the lowest GST taxation rates in the GST 2.0. So if you looked at household shoppers and consumers, they found lower prices on daily goods and everyday items due to rate cuts. And during Navratri, normally things that you buy, electronics, vehicles, and white goods, they all had a drastic reduction in GST. So they became more affordable for the common man. And therefore, you saw sales, including, let's say, sales of automotive cars, which actually increased by over 35% compared to the year before in this year. The second thing, because the input taxes and other taxes also were reduced, right? Industry groups such as automotive, consumer durables, FMC sectors, it actually improved demand, helped them to scale, reduce their pricing, and not only the tax reduced pricing, but overall the pricing reduced. And therefore, the lower GST boosted retail sales. So it was a very positive move here. And the timing obviously was interesting because it was done before Diwali. It was done from the 22nd of September. Almost all sectors of industry welcomed it, and consumers welcomed it by going out and spending and actually increasing the tax collections, which were feared to be declining because of the decline in rates.
Absolutely. Now let's listen into the Finance Minister, what she had to say while introducing the new GST reforms.
With the continued reforms, dedication, teamwork, we will now reach new heights in revenue, compliance, and also in service delivery. The next generation of GST reforms will make this system a lot more efficient, equitable, and growth-oriented. So ultimate goal is to make life easier for the honest taxpayer. If we do that, economic growth and prosperity will surely follow.
The direct taxes or the income tax reforms have also been revolutionary. And if you go back in time to the confiscatory regime, if I may say so, of the 70s, where at one point in time the tax structure was draconian to say the least. Now, much water has flown over the decades and the income tax regime has undergone a sea change. Now, Mr. Kohli, how do you see its evolution and, of course, the latest reforms which have made the ease of living more predominant now?
Well, if you see the number of taxpayers, or shall I say the number of return filers in our country, last year, the last recorded number was probably, over 8 crores. And this was time when you're referring to back in history. They were hardly counted in lakhs. So the number of compliers or the number of return filers has gone up phenomenally. And the reason for that has been the trust which now the citizen places on the taxation system. And this trust has come out of technology. This trust has come out of government's belief that yes, taxpayers are honest if they are given a chance for a very decent and for a very reasonably appearing income tax law. So I think these changes have been brought in time year after year. 2025 saw one of the biggest changes of Section 87A, when this was a long-standing demand of a lot of taxpayers that the limit should be raised. So without raising the limit, the government introduced 87A rebate that now incomes up to rupees 12 lakhs can avail this benefit, and you can literally bring your tax down to zero. So I think this was a huge raise, because for people who are earning more than that, now the calculations go in a way that if you're earning more than that, then all the tax slabs they apply. Although the tax slabs have also been revolutionized, because now the tax slabs start from 4 lakhs. So the entire tax slab system was revolutionized. A lot of unnecessary deductions were reduced. And we all know that because of the new regime which was introduced, that was a few years ago, a lot of deductions which people used to claim, they are not required. And my understanding with this 12 lakhs regime, which is now currently in vogue from 1st of April 2025, I feel almost 75 to 80% of the taxpayers would like to opt for the new regime. So the old regime, without being banned altogether, which had Chapter 6A deductions and, all those Section 80 family deductions as common man knows them by, I think they remain. So government did not withdraw that, but introduced alternate, where if you've got a choice, if you've invested a lot, you can probably come through that route. Check out at the portal itself which regime is beneficial for you. And as I said, 75% of people may find the new regime much more beneficial. Another big reform, Nishit, was the announcement of Income Tax Act 2025. We all knew that our Income Tax Act, the older one, was 64 years old. It had crossed the age of being a senior citizen. So there was a high time that this act needed to be rewritten. It needed to be revamped. And we saw that from total number of words, Nishit, from 5.12 lakh words in the old law. We have now come down to, this is going to be effective 1st of 2026. 2.6 lakh words will only be remaining there. From 823 to 880 pages of that act, we'll now be down to about 622 pages. So you can very well see as to how far the act has been concised, new tables have been introduced, the language has been simplified. So the focus of the new law, while preserving the old taxation system, has been to make it more simple, make it easy, and make it more concise, Nishan.
Absolutely. We'll talk about the new tax regime more in detail. But before that, let's listen into the Honorable Prime Minister, what he had to say of the new reforms which have erased the unnecessary compliances.
पिछले दिनों हमने कई रिफॉर्म्स किए, एफडीआई हो, इंश्योरेंस कंपनी की बात हो, 40,000 से ज्यादा अनावश्यक कंप्लायंसेस को हमने खत्म किया है। इतना ही नहीं, 1500 से अधिक पुराने कानून जो बाबा आदम के जमाने के थे, उन सबको हमने खत्म कर दिया है। हमने दर्जनों कानूनों को सरल करने के लिए संसद में जाकर के जनता के हितों को सर्वोपरि रख करके बदलाव किए हैं। इस बार भी हो हल्ला के बीच लोगों तक बात पहुंची नहीं होगी, लेकिन एक बहुत बड़ा रिफॉर्म इनकम टैक्स एक्ट में हुआ है। करीब 280 से ज्यादा धाराएं हमने समाप्त करने का निर्णय किया है। और साथियों, सिर्फ आर्थिक मोर्चे पर ही रिफॉर्म नहीं, हमने नागरिक के जीवन को भी आसान बनाने के लिए रिफॉर्म किए। इनकम टैक्स रिफंड की बात हो, रिफॉर्म का परिणाम है। फेसलेस असेसमेंट की बात हो, रिफॉर्म का परिणाम है। 12 लाख तक आज इनकम टैक्स से मुक्ति दे देना।
Mr. Chennai, we just heard the Honorable Prime Minister talk about the new income tax regime and the kind of relief it would bring to the people. Now, the income tax reforms, obviously, it provides the relief, but it could also lead to the middle class consumption paradox, to say, wherein the extra disposable income would invariably, of course, come back into the economy with a boost in consumption. However, the grey area remains the default new tax regime, which provides no incentive for LIC, PPF, ELSS or other small saving schemes under ATC and D, which have been the time-tested tools for harvest in one's golden years. Can we say that the younger workforce is incentivized in sacrificing long-term retirement security for immediate consumption?
There are multiple things happening at the same time in the taxation regime in the country, and they play in different types of ways. So the first thing is, and specifically for your question about moving from the old regime to new regime where there's no deduction for incentives, right? You will find that the data which was recently shared by the finance minister said that over 85% of the filers have actually adopted the new tax regime. They are finding it easier in compliance without giving you any kind of setback in investments or in number of life policies or other things happening there. If you look at just the numbers of 36%, the tax returns actually they increased this year. 1.5 million people filed revised returns. So the ease of and the digital first approach here actually made it easy for people to comply and participate. But if you look at the numbers in terms of the investment in mutual funds, they've actually shown a greater enhancement. If you see the number of life insurance policies actually sold, the number has actually increased. So there has been no kind of shift in investment things because of the new taxation policies. In fact, a lot of the investors have returned to investing in life insurance policy, fixed deposits, and mutual funds. Equity market behaving differently, so the younger people are looking at different alternate investments, and therefore the change in the regime is not really impacting this. And 15% is the new business premium in, let's say, in September or November last year. So there is no decline in that. And the young people and Gen Z also are now realizing that they need to look at investment for the future, and there are different options and different asset classes that they're looking for in investing. But they're not moving away from, let's say, life insurance policies or bank deposits, etc. Those numbers also are growing.
True, Mr. Chinoy, you, as you rightly put, that people are, especially the youngster, the Gen Zs you talk about, they're looking at alternate sources rather than sticking to the older forms. Let's listen into the finance minister on the benefits of the new tax regime.
Is simpler, lesser in rates. It also gives a flexibility to the taxpayer to see where he wants to put his money in the absence of exemptions which is available in the old regime. The old regime has not been dissolved. It is still on. So as an alternative to the new tax regime, it still offers all the benefits of various deductions such as interest on home loan, etc.
There had been a clamor from all the stakeholders for doing away with the GST for personal health insurance and life insurance policies. Now, with the GST 2.0 just doing it away, Mr. Kohli, do you see more and more people coming forward to be in the insurance net, especially the health insurance and, of course, the life insurance? And what, in your view, should be the areas which the government needs to look into to bring about more such social security for citizens?
What the finance minister said about, people moving away from, and your question where you were talking about people moving away from these investment and insurance schemes because of Section 80C or 80D. Well, initially they did find a challenge because insurance, for example, in India was done mostly for tax reasons. Taxpayers used to buy in the month of January and March. They witnessed 75% of their sales happening in this particular quarter because that was the tax saving season for them. But I think now this delinking of your insurance and tax benefits has now put insurance in a sphere where people have started understanding that insurance is for risk coverage. Insurance is not only linked to tax savings. So I think that has been a paradigm shift in the way insurance is perceived as of today. And I think the penetration of insurance is growing by the day. And with 100% FDI now allowed in insurance, you will find more professional management coming and taking over the insurance companies. And you will find the penetration and the schemes and the choice before the customers being more than before. Well, about health insurance and the GST being removed, I think it is helping the penetration. And there was an apprehension initially that after the GST removal, some of the insurance companies may decide to enhance the premium because they lose their input tax credit benefit. But that has not happened. I think the premiums are now much more reachable for the common man. And I think people are able to get more of it, both in terms of health and life. That health insurance is a must because one major expense on the medical head can probably set you back financially and can significantly reduce your net worth or whatever you've saved all your life. So I think health insurance is now gradually being understood in a very, very positive manner. And as for the suggestions to the government on the social security, I feel more NPS type schemes, if they are introduced in varying proportions, I think they can further help because NPS is more about investments, getting back your money. But if there are variations introduced in this scheme, which can probably reach the lower rung of the society also, although there is Atal Pension Yojana, but I feel there is still a room for a few other government-sponsored pension schemes where government may not bear the fiscal brunt of it. It can be left to the people to contribute, but if there are variations and creativity introduced in those schemes, I feel that social security or long-term pensions in our country have a tremendous scope, and there is a lot of population which is looking for these alternates because the private alternates are either very expensive or the awareness about them is very, very low. So that is my suggestion, that if more NPS type variations are introduced, both GST and the new regime introduction. It was being apprehended earlier that probably the insurance industry will now finish, assumptions were being made. But surprisingly, with the new regime becoming more penetrative, it has not impacted. It did give a bit of a setback initially, but people have now started to understand that insurance is something that we need for ourselves.
Mr. Kohli, talking of health insurance, as they say that you are just one hospitalization away from poverty, and you very succinctly put that now with the new structure, you can say that people have been disincentivized by pulling out of the ATC and ATD benefits, but at the same time, as you said that in the last quarter of any fiscal year, there was a clamor for this buying of the new insurance policies, be it the health or the life insurance policies, just for the tax benefits. But now people have to realize that no, it's beyond the tax benefits and life is more precious, more to it than just tax benefits. Let's listen in on the GST reforms. The National Real Estate Development Council, that is NAREDCO Conference Chairman Niranjan Hiranandani, who said that the total implication of the GST cut directly is around 25,000 crore rupees.
The total implication of GST cut direct is around 25,000 crores. We have to understand that's almost 10% of what the collections are at this point of time. So obviously the benefit of GST cut is going to go into the system. Two things will happen. The prices of commodities will come down. The second, there will be more purchasing power which will be there with the people because there will be residuary amounts which are there. So the multiplier effect of the growth of the economy, which is already running at 7.8% GDP growth, I think will move beyond 8-9. And if we move everything correctly, by mid of 26, you will see the first time in the world a double-digit GDP growth for Bharat.
Mr. Chinoy, in line with the Honorable Prime Minister's vision of Viksit Bharat to be developed by 2047, a key goal of the 2025 GST rationalization was correcting the inverted duty structure in sectors like textiles. How have we fared actually in seeing a tangible improvement in the Make in India competitiveness for MSMEs in particular here?
Initially, if you look at the GST reforms, and even with the number of rates of 5 and 18%, you can still argue that there are some sectors that have inverted duty structures. But across majority of the industry, including the textile industry, compared to multiple slabs, the two-slab GST 2.0 reform is making it easier for firms to comply with and to take the benefits. Now, with a lower GST impact, you can actually reduce your prices, become more competitive, and therefore you can increase sales, and therefore you can increase scale, and then get into a virtual cycle of further price reduction, therefore getting further competitive going ahead. So this GST reduction actually is an enabler for you to reduce prices, then get greater market share, increase capacity, greater scale, again, get benefits of scale and get into that virtual cycle again for all sectors of industry. Some sectors, the textile industry, as you said, Nishit, there was a concern about 2,500 rupees and below and above that particular price. But I think they have actually learned to comply with it and understanding that the two segments target different segments of population and the difference really does not impact sales in one segment and the other segment. But very importantly, the whole system that is there for the GST reduction and the income tax reduction has led to greater money in the hands of the consumer, led to greater consumption. And of course, textiles is one area after, you do your white goods, your car, etc. Textiles is something which impacts people across the board, from school uniforms for children to other office people wearing office wear or construction workers buying their uniforms or their type of textiles. It has impacted many, many segments very positively. And you're seeing, despite the reduction in exports because of the tariffs, you're seeing the textile industry doing consistently well, primarily being driven by the GST reforms.
Before we proceed any further, let's listen into the Union Finance Minister, what she had to say after the 56th GST Council meeting.
These reforms have been carried out with a focus on the common man. Every tax levied on common man's daily use items have gone through a rigorous looking into. And in most cases, the rates have come down drastically. Labor-intensive industries have been given a good support. Farmers and agriculture as a whole will also benefit by the decisions we have taken today. Health-related also will benefit. So the key drivers of economy have been given a prominence.
Mr. Kohli, the reduction of GST on commercial vehicles from 28 to 18% was indeed a bold move. Now, to what extent has this helped in managing the supply side inflation in the face of global commodity volatility?
The inflation numbers, they speak for themselves. Look at our inflation. We are down to less than 1% inflation. In fact, we almost went down to 0.2%. We are still well below 1%. So I think when you reduce GST on commercial vehicles, obviously, you find more capital investment coming in the automobile sector from the transporters and from the people who invest in commercial transport. So that has brought down the cost, and overall, when the vehicle costs you less, you're able to rationalize your freight accordingly and bring down inflation, reduce the logistic costs. It is the target of this government to reduce the logistic cost in India, which was considered to be a little higher as compared to the global average. The idea is to bring it down to probably 9 or 10% or max 11%. It was supposedly high. So I think this reduction in the GST on commercial vehicles is definitely going to bring down those logistic costs. If you ask me, Nishit, to summarize the sectors, when this reform came, I remember I did a number of interactions on which are the 4 or 5 key sectors which benefited, from an investor's point of view and from consumers' point of view. So amongst the top in terms of volume was the automobile and transport sector. As you mentioned, commercial vehicles was one of them. That was right on top of my list, of the sectors which benefit. The number 2 sector was construction and real estate, because reducing GST on things like cement and construction material, I think suddenly changed the whole game in the construction industry, because the cost of construction coming down, with the government focusing on affordable housing and so on and so forth. The entire middle class, even the lower middle class or the poor people also. I think construction has been the second sector. Third sector, which benefited, which the finance minister was speaking a while ago, was agriculture and machinery. With rationalization of GST rates on agriculture and machinery items, I think it has brought a lot of relief, which the agriculture sector always needs, being one of the very sensitive sectors and very paramount sectors in our country. And last but not the least is FMCG and personal products. Well, as I said, most of the items which you use in your groceries or in your toiletries, I think with the GST being rationalized over there, it has brought down the budget. In fact, we did an analysis at that time that for an average middle class person earning, let's say, 50,000 rupees a month, it has resulted in saving of about 1,500 to 2,500 rupees only in terms of groceries and toiletries which the person buys in a particular month. Which means if I put it on an annualized basis, a saving of anything between 18,000 to 30,000 rupees, which is a lot of money.
Right. Before we close, let's listen to a report by Akashvani correspondent on the GST reforms.
The 56th meeting of the GST Council, chaired by Union Finance Minister Smt Nirmala Sitharaman, approved Next-Gen GST reforms with focus on improving the lives of the common man and ensuring ease of doing business, including small traders and businessmen. Effective from 22nd September 2025, the reforms reaffirm India's commitment to building a simpler, fairer and growth-oriented GST framework. In line with the Prime Minister's vision, the reform package includes rate rationalization with a simplified two-slab structure, 5% and 18%, sweeping rate reductions across sectors with focus on common man, labor-intensive industries, farmers and agriculture, health, the key drivers of the economy. Reforms brought direct savings to households by reducing taxes on everyday essentials and packaged foods. The cut in GST on cement and construction materials gives a big boost to the housing sector. Cheaper machinery and lower rates on biopesticides is helping small farmers reduce costs and encouraging sustainable farming practices. Education has become more affordable with exercise books, erasers, pencils, crayons and sharpeners moving to 0% GST. GST exemptions on life and health insurance premiums expanded financial protection and support the vision of Mission Insurance for All by 2047. GST Reforms 2.0 is a milestone in the sense that it subsumed 17 different taxes and 13 cesses into one unified tax, eliminated cascading of taxes and created a single national market with common rates and procedures.
Well, thank you, Mr. Kohli and Mr. Chinoy, both of you, for having joined in and shared your valuable points here. Thank you so much.
Thank you so much. It was a pleasure. Thank you.
Thanks.
In the special series 2025, the Year of Reforms, you were listening to a discussion on citizen-centric tax reforms. The participants were Sharad Kohli and Dilip Chinoy, economic analysts. Moderator was Nishit Kumar. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR.
Current affairs.